Good day. The date today is 22nd of December 2022. It's a Thursday and the time is 12:32 p.m. Just after the close of the market at midday, half day. Welcome to Purchase Rationale. Purchase Rationale provides 15 reasons when considering a particular stock. First, I must put in a disclaimer. Whatever is shared here is purely for information and education. Should you decide afterwards to put in an order, first kindly consult your financial planner or your licensed broker, as this is a mandatory requirement, all right, on your part. The stock that we are going to discuss today is Red Tone Digital Berhad. Red Tone Digital Berhad, a telecommunication company, and the stock code is 0032. All right. Okay, let's get to uh, the fundamental as usual. To start off, we will calculate the intrinsic value. Okay, to calculate intrinsic value for return, we divide the enterprise value. Okay, for the annualized most current figure 275.28. That's the enterprise value. 27528 million divided by the total number of shares outstanding, which is seven excuse me 72.95 million, and you get intrinsic value of 36 cent. 36 cent intrinsic value against the current market price of 52 cent. Okay, so looks like there will be a premium to be paid for return for buying at this current market price of 52 cent. And how much difference will that be on this premium? Okay, 36 cent minus 0.52 or 52 cent. Okay, the differential premium to be paid is 16 cent. Okay, and in terms of percentage rate, 16 cent divided by 0.52 is about 32%. So 32% premium to be paid if you buy the current rate tone at the market price of 52 against the current 36 cent intrinsic value. So the question is it worth your while to consider buying into red tone at this price of 52 cent? Well, to answer that, we have to look at actually the operating earning yield percentage. Okay, I'll take just a few seconds to explain what this operating yield percentage mean. What it means that it takes the net current operating profit divided by the total market cap. And you know, total market cap means is the current market price, which is 52 cent, times the total number of shares outstanding. And then you divide it by the total outstanding shares, outstanding, total shares outstanding. So you get back on a per share basis. So in that case, actually, uh, you have factored in the premium into the price, and if operating margin still cover for the premium uh, that you have to pay. In this case, it more than covers by 13%. So no issue. even though you may be paying a premium of this X percentage, the operating margin of 32.5% more than covers the premium to be paid. And more interestingly, the ROIC is 19.6%. And if you look at the PE ratio of about 9, actually, here we can roughly factor in what we call the magic formula. If you take ROIC divided by the PE ratio, it's about 2 times. Okay, anything more than one is good consideration through the magic formula. Less than one, maybe the return may not be so good. In this case, this is twice double up. So Redtone, despite having to pay the premium, is still based on magic formula, has a growth path of 2 more times. All right. Price earning ratio forward is 10.26. Okay, so looks like there is going forward the price action is going to ascend. Enterprise value is most interesting. Enterprise value over EBITDA, which is my favorite uh, indicator, that is what I call the acquirer's multiple, is only 2.9, or let's say 3. Okay, anything less than 10 is good for me. Now this uh, uh, at 3, you are actually buying, even at 52 cent, you are actually buying at much greater value than what the normal market will accept the price for at 10. Okay, still pay a dividend yield of 4.62%, and based on the dividend payout ratio of about 36%. That means for every dollar net profit, they pay out about 36 cents in terms of dividend. Free cash flow 55.3 million net. That means it has a net free cash flow, and it has a free cash flow margin of 41 cents, meaning for every dollar sale, it has about 41% to cover its expenses, to pay out dividend, or to expand the business and grow the business by investing in capex, or to buy more machine or employ more people. Okay, it has a net debt of 120, minus 123.4 million, meaning Redtone is actually a net cash company. However, it has a bad debt or doubtful account of over, oh, minus 10 million, meaning it has probably recovered. All right, it has recovered some account receivable from previous bad debt. Okay, Poitrovsky score 8, beautiful. Anything more than 7 is considered excellent. So looks like Redtone is making a comeback in terms of profitability delivery. The Altman score, Z score of 4.44, more than the usual 2.5. So Redtone is not going to go bankrupt in the coming 2 years. No way, right? Okay, so beautiful. Only the by niche score, M score, is slightly lower than the normal, which is the normal is normally minus 2.5, but this is 2.11. Well, it's a company probably on the road to recovery, so I'll be forgiving on that. So generally speaking, Redtone is a company that you should focus on, and perhaps put your money where your mouth is. And I think it is probably a good investable company in the mid to long term. Okay, how about sentiment wise? That's the most important thing. How is the market responding to rate tone? Okay, on a trend wise, no problem. one higher low, two higher low, three higher low, and today we see the fourth higher low, meaning a trend is confirmed. All right, and if you base on the new assessment method on trend, you can see that the red MA21 line crosses the MA55 line, then it crossed the MA144 line, and then it crossed the MA233 line, meaning uh, it is actually now on a ascending bull market basis. All right, and not only MA21 crossed the 233 line, the 55 line and the 144 line also cross the MA233 line. So there is many confirmation as to when the trend that has been formed. Okay, on the momentum wise, in August of last this year, uh, this is the first time the ROC went above, break through the zero level, and it has been on the upper side of the zero level ever since. So indicating good and nice momentum, about 45 degrees, strong momentum going up. All right. And you can see there, beginning of on August the 16th, the candlestick has kept above the cloud all the way. Okay, and now the candlestick is above the MA21. For as long as it keeps above the MA21, I am sure the trend and the momentum will keep on ascending. All right, so as it is, this is a pull back rebound entry strategy. All right, it there is a strong support here at the MA21, the red line, and then three green candlestick and one red small red candlestick. So meaning this is a pullback rebound. All right. Should it break? Should there be a breakout, squeeze breakout happening at 54 cent? Then I am very confident that it will reach the target of 60 cent. All right. So if we buy the price of now 52 cent, okay, if we do an entry of 52 cent with a target price of 60 cent and a stop loss of 49 cent, it will yield a reward to risk ratio of 2.3 times. Okay, and also okay, before I talk about uh, bias intact, we can see that actually red tone is now riding on wave 4 heading to wave 5. That is uh, the third impulse wave of Ilio wave here. Okay, wave 5 before it corrects. Okay, so there is still a good range to hit the target at the apex of wave 5, and indicating very strongly is actually a bias intact, meaning the the volume keep on breaking out of the 90 days average, and also the price action is also on a breakout basis, more above the MA21 line. Okay, so looks promising for return, even sentiment wise. So what do you think? If you should put your money where your mouth is, you decide. All right. And if you think this trading idea shared is informational and educational, please like, share, and subscribe. All right. If you share and subscribe, it will help the channel to grow. and also allow others who are interested in the stock market trading ideas to watch and learn something new too. Okay, pay it forward. Okay, help others so that you can help yourself. Thank you for listening and your time that you spend with me daily. Okay, I appreciate it. You have a good day and bye bye. And oh, before I forget, happy Tong Yun Day. It's a spring solstice day today. Okay, have a Hi, my name is Eddie C. I'm the author of Trend Following Metrics. Please allow me to introduce to you my latest book release. In this book, we explore trend following metrics and its advantages so you may decide if it fits your investing style. Trend following is a trading style that tries to catch the longer trends in the market and ride them for as long as possible. Its advantages are in trend following, you catch trends from the very beginning. Your entries and exits don't need to be that exact. Trend following don't take away much of your time. You enjoy lower transactional costs relative to day trading. You detect and cut your losses early. I personally recommend the book Trend Following Metrics should you want to deepen your learning about trend following. And I encourage you to read this book. In launching the book Trend Following Metrics, I have a book promotion fair called Read to Improve from the 19th December till January 31st next year. Excuse me. Should you use the discount code TIF Thailand, India, Finland, TIF Thailand, India, Finland, you are entitled to buy any two books from my Trend is Friends books collection at only 45 ringgit. Grab this offer while it lasts. Thank you for listening to my commercial, and I hope to see you then. Thank you and bye bye.